Is short-term rental investing dead in 2025? A lot of people seem to think so. If you read any posts on the internet or comments on my social media, the only people who made money in these people's eyes are the early adopters. So you had to buy 10 years ago in order to be successful with short-term rentals. But here's the truth. Short-term rentals are not going away. The vacation rental industry has been around for centuries, longer than Airbnb, longer than the internet, and it's not going to go anywhere in our lifetimes. We just have to adapt to the changing environment. After the crazy, unpredictable times of COVID, the market is finally stabilizing, which as an investor, this is what you want, an established and stable asset class. Yes, the early adopters did make a lot of money, but what you want as an investor is a little bit more predictability. So in that huge rise and fall during COVID and directly after, a lot of people got really, really lucky with their timing and a lot of people got really, really unlucky with their timing. That's not an ideal scenario when you're investing in an asset class. You want a much more predictable, stabilized market, which I think we have finally achieved in the short-term rental world. In this video, I'm breaking down the real state of short-term vacation rental, Airbnb, whatever you want to call it, investing in 2025. What's changed and why right now might be one of the best times to invest in short-term rentals. Let's start with where the short-term rental market actually is today. I'm taking a look at AirDNA's 2025 mid-year report. US listings are expected to grow modestly to 1.7 million in 2025. Demand is expected to grow to 5.8%, while supply is only expected to grow 4.5%. So that is a really nice balance. It means that demand is slightly outpacing supply, which helps hosts stay booked. Occupancy is also stabilizing at around 55.8%, which ends the decline that we saw in 2023. 2023 was the worst decline of the last 10 years, and I think it's pretty obvious why that was. We saw the COVID highs in 2021, 2022, 2023. Everything started to really come back down to normal. All that being said, the last few years were not comfortable and really not very pretty for short-term rental investors. Occupancy dropped to 55.2% in 2023. ADRs dipped and RevPAR went down almost 6%. But the latest data shows that we've already hit the bottom. We're not seeing that continued drop in RevPAR. So again, nice stabilization of the market. ADRs are climbing again, up nearly 5% in 2025. RevPAR, or revenue per available room, is expected to grow 6.2% this year. And most importantly, both demand and supply, as we mentioned earlier in the video, are moving at the same pace, which again equals that nice stabilized market, a little bit more predictability in the investment side. Now, as you and I know, real estate is very market specific. So we've been looking at national data, but national data can't tell you what's going on in each and every little market. Different things are going to be going on in Portland, Maine than in Austin, Texas. So let's take a quick snapshot of a property in my portfolio that is reflecting this same trend. So I bought a basic 2-bedroom cabin in the Smoky Mountains in Tennessee in 2016. In 2017, that property made $34,000. We were underwriting to hit about $40,000 on that property back then. By 2021, that same property hit $86,000 gross. This is gross, guys. I'm never gonna talk about net here. It's not apples to apples. So in 2022 and 2023, it backed off of that top 86,000 number to be around like the low to mid 70s, 72, 73,000 for a few years. Still strong, but a step back from the peak. And in 2024, it leveled off and did about $76,000. So if a person had only owned this property between 2020 and 2024, we're halfway through 2025 now. I didn't do 2025 numbers because we still got a lot of high season to go, so I didn't want to skew the data. So whole years only. If somebody had only owned the property between 2020 and 2024, it would seem like, oh my gosh, it's a bust. I'm not making money like I used to. I made more money in 2022. I've gone down. I've got to sell this property. Everything's going down to zero. That's not the case. If a person had owned this property for the entire almost 10 years that I have, then you can see that it's still very much trending upward. Yes, we did have a peak. Yes, we did come down from the peak. However, the income from that property is still trending upward over time. We're still hitting almost double the income that we underwrote the property to hit back in 2017. So it's not a bust, it's just a blip. So I think what this is a really good example of is that real estate is not a get rich quick plan. It is a get rich slow over long periods of time plan. Real estate over time tends to trend upward, even though you can see fluctuations that go up and down over that long period of time of trending upward. So a blip is not anything to worry about and freak out and pull your money out. It's not timing the market, it's time in the market. So remember that when you're investing in short-term rentals. That being said, so the income on my properties is almost exactly mirroring the data that we're seeing from AirDNA. Shows the big boom, the correction, and now a stable, predictable performance, which is nice. It's what you want to have as a real estate investor. You don't want surprises. Surprises are bad. So what's the key takeaway? Even after the dip, this property is still earning double what it did just 7 years ago. So why is this good news for investors? Because stability means predictability. I've mentioned this several times in this video. You're probably tired of hearing it. We are no longer in a wild west where there are deals just laying around on the MLS at 50% cash on cash return, ready for you to scoop them up. That's not real life. That was early adopter. That was not something that was ever going to be sustainable. So just because people did buy properties at that time does not mean that you cannot find success in a more stabilized market. We're also no longer in the Wild West where supply exploded 20% like it did in 2022 and crushed occupancy. We don't want either one of those Wild West scenarios. We want no Wild West scenarios when it comes to investing. So instead, now we have a stable, balanced market, and it makes it so much easier for you to run your numbers and to make smart buys. So those of you who know me know that I not only own vacation rentals, I also own a lot of long-term rentals, and my vacation rentals still far and away, as they should, outperform my long-term rentals when it comes to cash flow. With using automation tools, you can self-manage from anywhere in less than an hour a week. So those of you who are like, I don't want to buy myself a job, you're not buying yourself a job, you're buying yourself an investment that takes less than an hour a week to manage, and it sure as hell beats asking some dickhead in khakis when you can take your lunch break. So if you're thinking about finally jumping in and investing in a short-term rental this year, you are not too late, and here's how to take advantage of the recovery of the market. Number one, pick balanced markets. So these are areas with strong tourism demand and very manageable established regulations. What do I mean by established? Areas where the regulations are pretty set, there's not a lot of back and forth and push and pull and friction on the regulations in the area that you're investing in. So areas where the regulations have been in place for a really long time. These are areas, typically vacation markets like Destin, the Smoky Mountains, areas that are true tourism-driven markets. You will typically, not always, but typically find those favorable established regulations. Number two, add the right amenities. And I'm not saying go drop $300,000 on all kinds of crazy things to put in the backyard. That can get a little silly, and I have another video on that. We'll drop the link below for you to check out on the dangers of over-amenitization. But amenities that you need to have, things like hot tubs, game rooms, EV chargers, fire pits. These are not huge expenses that can make your property more attractive to guests. And last, you want to make sure that you're using a dynamic pricing tool such as Price Labs, Wheelhouse, Beyond Pricing, because if you're not, you're leaving money on the table, and let the software adjust your nightly rate to price you at the highest price per night. Now, this is not set it and forget it. You do have to pay attention. If you notice you're not getting booked, it can price you too high or it can price you too low. So you do have to manage this, but you have to be using a dynamic pricing tool. So, is it too late to start investing in Airbnbs in 2025? Absolutely not. The frenzy years are over, which is good. Those were not good years. I do not look back, even as a real estate agent, I don't look back on those years fondly in terms of my mental health. So that's a good thing. The market has matured, stabilized, and is showing healthy, steady growth. The investors who are successful now are investors who adapt and run their numbers carefully. Now let's talk about adaptability for a minute. The number one characteristic that will predict whether you are going to be successful at short-term rental investing or not is your ability to adapt, because the market changes. And the thing about short-term rentals that's different from long-term rentals is you can make tweaks and updates and changes to your pricing, your photos, a bunch of different things, and that will show up in your income in real time. You don't have that with long-term rentals. So you have to have the ability to adapt. If something happens and you realize you're not getting booked, you cannot lay down on the floor and kick your legs and say, oh, I bought the wrong thing. Y'all told me to buy the wrong thing. I shouldn't have listened to those people on the internet. No, you adapt. You get in there, you figure out what needs to change in order to get you booked, to get you back on track. Nothing is as big of a catastrophe as you think that it is. Hopefully you don't think that it is, but for those of you who do like to catastrophize, just be adaptable. That's really it. Go with the flow. Keep following that thread to the thing that gets your property booked again. If you got any value from this, hit that like button, subscribe for more short-term rental investing tips, and drop a comment below. Do you think that the market is back? Let me know in the comments.